Well, stocks getting a wall up today as corporate earnings reports were absolutely fantastic, but there were issues including material costs, and then finally that 10-year yield hit 3% for the first time since 2014, and all haywire broke loose. Join me now to help break it all down for you, Dr. Barton, the chief technical strategist at moneymorning.com, Veronica Dagher, a columnist at the Wall Street Journal, Lindsey Bell, research investment strategist at CFRA. Let me start with you, Lindsey. It was interesting because these earnings reports were absolutely phenomenal. The initial moves, what it was Lockheed Martin, Verizon, and certainly Caterpillar were higher. Why is the market so jittery that what's perceived as good news within minutes could be perceived as disastrous news?
Yeah, I mean, the devil really has been in the detail here, especially with Caterpillar. You saw them. The CFO came out and said this could be the high watermark quarter. I don't know why the market got so upset about that, because that's what analysts, sell-side analysts, have been pricing in going into this report. Q1 was going to have the highest profitability, and we're going to see a decline from there. The market, they have been relying on these earnings to really hold it up. And while the numbers have been very good, it doesn't seem like it's enough for the markets to continue.
What do you, so again, you know, there wasn't necessarily news there, perhaps a very clumsy handling the CFO in this particular case. But when I see a company like Caterpillar post the numbers they did and go down almost as much as a 3M, which I think really does have issues, it makes you wonder.
Well, you know, there's this sense in the market, is this as good as it gets? We have tax reform already, which has been an amazing thing for a lot of these companies, but that's going to make comparisons so much harder going forward. There's also other macro issues people are worried about, thinking about interest rates. They see the Treasury move. They see a lot of these issues out here in terms of also the global economic issues out there. You think about North Korea. You think about some of the other things on deck, and so I think that's making investors nervous.
You know, DR, from a chart point of view, if you can clearly see where we're making a series of lower highs, and every time we're on the cusp of a major breakout, we pull back, and we come back very sharply each time. What do you make of that?
Well, Charles, you and I love to talk about what's going on in the charts, and what I see is we've got about a 6% box that we're trading in over the last 5 weeks. Your point is very well made that we've made a series of lower highs, but we really haven't made much hay to the downside either. And there's one really important thing that I think is going to keep us afloat here technically, and that is that when we made our high just 5 days ago, our most recent intermediate high, we had the all-time high market breadth. So a lot of stocks still participating in these up moves, Charles. And to be very fair, the last 3 days before today were very low volume drops. That's usually not a portent of something bigger coming to the downside.
Sure, but a 750-point reversal, it gets everyone's attention. And I think what the problem here is, yeah, the breadth might have been great here recently, but it only feels like without the participation of tech leading the way, the market continues to grapple for leadership.
Yeah, you know what I would say to that is that the tech sector overall is 24% of the S&P 500 index. So of course you're going to need
historically that's been a problem, right? I mean, before that was like the oil sector, and then we had other sectors. And when you get one niche of the economy that represents that much of the stock market, but can it be skewed in a way where we're also missing opportunity?
Yeah, I mean, there have been 5 stocks within tech that have really been driving things, and I think there is opportunity in some of the smaller caps. I think today, too, getting back to the industrial moves that you saw, GE was actually up over a percentage point. So you're seeing investors kind of look for those values here. Caterpillar, Lockheed, those are very highly priced stocks going into these earnings reports. They have been phenomenal stocks over the last couple of years. Maybe now it's time to rebalance.
I saw the same thing in consumer discretionary yesterday. A lot of also-rans, you know, the Under Armours and things like that, finding buyers. But are the also-rans, Veronica, going to be good enough to lead a market higher? I mean, you know, Under Armour and General Electric aren't going to take the market higher.
Right. They're not Facebook. They're not Twitter. They're not some of these companies out there that are really been driving people's 401ks if you're lucky enough to be invested in them.
Panic, though? Is it panic time despite what we saw today?
No, not yet.
Panic time?
No.
DR Barton, panic time?
Oh, definitely not, Charles. I think, you know, I'm looking to buy this pullback.